The local economy is booming with activity, with the third quarter of 2010 revealing a 6.1 growth rate. With this growth has come both a need to expand business and a higher capital requirement for small-scale and medium enterprises, as well as the microfinance sector. This need has seen local companies seek additional capital to run their operations. For companies listed on the Nairobi Stock Exchange, options are endless with a booming equities and bonds market. However, for smaller companies, the new capital drive is expected to come from a series of private issues. So what is a private share issue?
A private share issue does not have the same restrictions as an IPO. It does not have the same restrictions as an IPO. So the regulatory burden is less, and you have to be selling it to a fewer number of qualified investors.
For example, if a company intends to list on the NSE, it must have a share capital of between 20 million and 50 million shillings, an asset base of between 20 million and 100 million shillings, and must have been in existence for more than 5 years, declaring a profit for 3 consecutive years leading up to the IPO.
When you're doing a small issue, the costs just make no sense. So, it depends on the size of the issue to reduce your costs as a percentage of the amount of money you're raising.
However, all is not lost for SMEs and microfinance institutions, with the NSE expected to create a special segment to cater for their needs, as well as expand the number of listed companies from the current 53 companies to give room for more activity.
Small and medium size enterprises are the lifeblood of our economy. They need to be able to find a platform to raise capital. But really, it's allowing investors to participate in higher growth, early stage companies.
Whichever way the market pans out this year, the SME sector is bound to enjoy additional investment, with investor appetite for the market on the rise. Henry Githaiga, Citizen Business.